Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Solana, conduct machine learning based price forecast, regression analysis, and ROI year-to-date ROI analysis. None of the content is financial advice. Let's get started. Over the last year, that is since 2025 began, and from year to date, the performance of Solana is in orange, whereas performance of Bitcoin is in blue. You can see Bitcoin is right now slightly up from the yearly open, about 1% from the yearly open, whereas Sol is down 22%. There was a phase of the market cycle where Bitcoin was rallying from its yearly open and Solana was outperforming. At one point, Bitcoin was up by about 12%, and at that point, Solana was up 32%. But as Bitcoin started having a negative ROI from its yearly open, Solana slowly but surely started underperforming Bitcoin. Again, this is not specific to Solana. You can see over here ETH. If you add ETH to this chart, ETH is in this yellow line. ETH has done considerably worse from the yearly open compared to even Solana, and Bitcoin has barely made it slightly positive from the yearly open. If we look at the overall crypto market, it's the risk levels have gone down from the December highs of about 0.6. Now they're touching that 0.3 level. Roughly speaking, we are in this low risk regimen per this analysis of risk levels between 0 and 1, where 1 represents maximum risk like they represent back in May 2021 and November 2021, and 0 represents close to minimum risk. Again, from the market cycle, if we track it from April 2023, we did have several instances where the prices were in the lowest risk, color coded by blue color, moderate risk in yellow color, especially till about middle of January 2025 and early February of 2025. Since then, the moderate risk regimen has gone down, and now we are operating in the low risk regimen between 0.4 and 0.2 risk. Solana has also taken a beating in that time period. If you can see, still Sol is number 6 by market cap, 77 billion, slightly behind BNB, ranked number 5. If you ignore Tether, which is a stable coin, Solana and its token Sol is number 5. If we look at the current price at around $148, circulating supply at around 517, total supply at around $600 million. So almost 80, more than 80% of total supply is in circulation. If we look at the price versus market cap growth or decline over the last year, this is the logarithmic chart of price versus market. This is price over the last 1 year. If we look at market cap over the last 1 year, essentially same one and the same chart. That means whatever growth occurred in the market cap got reflected back in price. If we look at Sol and conduct machine learning based price forecast over the next 6 months, if the market does recover, the bull case for Sol per this model without a euphoria blow off top scenario within the next 6 months is between $170 and $340. The base case is between $155 and $183. The bear case is between $86 and $133. If on the other hand, if there is a macro euphoria phase in the market over the next 6 months and Sol participating heavily in that macro rally, then the price of Sol could be between $182 and all the way to about $560 per this model. That's the machine learning based price forecast for Sol. Again, likely scenario, if this pink line gets the resistance of the pink line gets behind, we are behind rallies beyond the price rallies beyond this pink line, then the next level to watch is definitely the yellow line before the orange. That is the 2 standard deviation forecast. If and when they materialize, that rally could be short lived in the post halving year. If we try to analyze Sol with respect to technical levels, again this is ETH, but if we try to analyze Sol in this in this regimen, again the major resistance over here at $158, that 21-week exponential moving average, and $169, the simple moving average, 20-week simple moving average. Those are some of the resistances to look for. If we try to extrapolate this slightly even further over here. At one point, Sol in this bear market dropped from $260 to less than about $8. So that was a 97% drop. It was a monumental drop. The key levels to look for now that the price is above $135, that 0.618 fib level at $166. This could coincide with the 20-week simple moving average having a downward slope over here, and the next level at around $209. Those are the two key levels to watch in terms of technicals, also corroborated by this the bullish case between this $200 and $216 early to mid June of 2025. That $210 does hold significance for this model. The regression based fair value for Sol comes in at around $232, so slightly higher than the 0.768, so 0.786. If we try to look for some macro peak for Solana without a euphoria blow off top, that peak for Sol could be at around $482, the fair value at around $233. So that's one key level to watch. Right now the prices did have some support at around 1 standard deviation regression to the downside at around $110. That floor or support is at $110 to $112. The fair value at around $232. The 1 standard deviation ceiling at around $480. Those are the key level to watch. For this model, this price is for its fair value analysis is lower than the fair value. Prices can stay for below the fair value for a prolonged time, especially when they're below the green line. That's where most of the great deals in the market kind of are offered, and as the price comes close to the 2 standard deviation or the dark green line, like they did in the bear market of 2022, that's when the major bottoms occurred for Sol. At one point in 2025, though, the price did come lower, especially in the week early April of 2025. The price at one point was lower than $100. That was lower than the 1 standard deviation residual applied to the fair value. So that's where most of the bounce occurred for Sol in this rally. In terms of the DCA model, to identify what risk levels makes the most amount of sense, using the same polynomial regression framework, right now the risk levels are at around 8%. If the hypothesis is only to DCA when the risk for Sol is less than, let's say, less than 10%, this model does identify some of the best times to DCA. Again, this plum color is less than 10% risk. The opposite of this is, again, when to think of DCAing out, the 40% risk and the 50% risk. That's all had enjoyed in early 2021. Again, this time around we did the best we could do is about 37% risk in March of 2024, when the price was first at around $202. This time around, though, the regression line has kind of signaled if there is a blow off top for Sol. The price for Sol in that even in that 30% target for Sol could be at around $340 per this model. The higher end is at around $570 to $580 for Sol for this bull run. Again, the simple moving average based target right now, the 20-week simple moving average based risk level is at 20%. If they were to go back between the 40% to 60% target that we have on this channel for Sol, again, if the prices were to come back in this territory like they do in major bullish rallies between that 40% and 70%, the price could be somewhere between $234 and $280. So that $280 for Sol is higher than the previous, so that is higher than the 2021 high, but not quite high as 2025 high for Sol. This is the conservative estimate for Sol for the 20-week simple moving average model. The time weighted average price model did help identify a great accumulation zone for Sol between April 2022 till about November 2023. Right now the time weighted average price is at around $75. The current price is around $150, so about a 2x from the time weighted average price. In the bear market, potentially in 2026, this time weighted average price based model could signal a decent accumulation phase if the prices do fall down in the midterm year or the year after the post halving year. So with that all behind us, the estimated bull run peak for Sol, again, that might per the weighted risk approach, per the DC or the regression model, the time weighted average price model, and the SMA model says about 1/4 risk at around 0.424, or roughly speaking 25% risk. The estimated bull run peak for Sol per confluence of several models at around $600, representing a reward of about 4x from the current price. And with that, I'd like to conclude the video by saying, first, the $166 is the key area of resistance with the 20-week simple moving average and the 21-week exponential moving average as one or two key hurdles before we get to that 0.618, and the one after that at around $210. The regression based fair value for Sol comes somewhere close to that $233 target. The one standard deviation ceiling at around $480, and the one standard deviation bull run peak for Sol at around $340. Those are some of the key targets to look for. That $340 target is also confluent with the SMA models forecast at between 40 to 60% risk, coming at higher end at around for Sol at around $330 if the risk were to go back to 1. So with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.